Guys, how's it going? Hope you're having an incredible week so far, and welcome to this video. So as you've probably seen the title of this, backtesting. Now we're going to get into this, but alongside the Road to Consistency series, which has recently been launched, really hope you're enjoying that, by the way. A lot more to come in the future, in the near future, which I'm very looking forward to. In regards to this, I really wanted to do another series alongside that, which is obviously going to help on a different perspective, which is going to be called the Trading Essentials. Now what this is going to be a technical based series around backtesting, forecasting, ASR, trade journaling, creating a trading plan, all these different things, and my process with that. And you know, the reason I wanted to do this, I really wanted to pay this forward to you guys, because I remember spending so much time in here trying to figure all this stuff out for myself in the beginning stages, when I could have really used a YouTube series or a YouTube video such as this. So I really wanted to pay that forward and give that back to you. So it's going to be incredible. Cannot wait for this. And first and foremost, it's going to be backtesting. Now, in my opinion, there's not just one way to backtest. So I did a video back in May, I think it was May last year, that had a great response. A lot of you found value in that and started actually implementing stuff out of that video, which is really great to see. And yeah, so in regards to this, there's the more generalized approach to backtesting, which was what that video was. So that's more so gaining confidence with an actual strategy. Then there's the second part, so it's going to be more so specifically diving into pair characteristics, pair behavior, understanding go-to setups, and all these different things alongside that. So that's going to be sick. This video is going to be a remake of that first video, just because there's a few little TradingView updates that weren't available back then. And my process has probably evolved just a little bit ever since then as well. So it's going to be really good to revisit this and do a few different episodes in regards to backtesting, forecasting, ASR, such and such. So it's going to be sick. But yeah, let's get straight into backtesting right now and dive into a pair.
I know it's gonna hurt, but you're worth fighting for.
Guys, so welcome on to the charts. Now, two things you're going to have to bear in mind before we get into backtesting is you're going to need two things. So you're going to need TradingView or a chart platform of your choice, and then you're going to need a backtesting spreadsheet. Now, for this example, I provided you a free one, which is going to be down in the link of this description, so definitely check that out. And it's going to be based on a Google Drive for you to use alongside some ASR documents and some forecasting documents as well. So hopefully that's going to help. But in regards to backtesting, this is a spreadsheet. We're going to be utilizing this today. I'm going to show you exactly how I use it. It's very simple. We can have it a lot more complicated to this, but just to keep it simple for this use, that's what we're going to use. Just bear in mind though, with this spreadsheet is locked, so you can't actually edit this original version. So what you're going to have to do is follow the instructions on this instruction tab here, where you file, make a copy, and then save this template to your drive to begin using it. So just something to bear in mind. I remember the last time I launched a spreadsheet, it just went disaster. I think I didn't lock it, and then everyone tried to overwrite the original copy, so it just went, yeah, it wasn't the best. But this time everything's locked, so you just have to make sure that you create your own copy. So that's gonna be good. In regards to this, so before we get into backtesting, the chart platform that I use personally is called TradingView. I just love the platform in general, and I've really got used to this over the past 2-3 years. Now, there's plenty of different chart platforms. You do not have to use TradingView. This is just my personal choice. But if you do want to use this, feel free to use the free version. The links will be down in the description below for you to check that out. The paid version is a lot more, you have a lot more tools to use on the paid version. So for example, just off the top of my head, when we go into backtesting, I don't think you can use the replay mode on TradingView when we go down to the 4 hour, the 1 hour, and the lower timeframes, but you can use it on the daily chart, I think. So just something to bear in mind. There's pros and cons of both, obviously, so it's just personal preference. Now, so I remember on the last example, on the last video I did, I think we used, what was it, dollar CAD? Yeah, dollar CAD. So in this example, let's use a different pair. Let's go to, what should we go on to? Let's go to pound Aussie. Let's do pound Aussie. Right, so just to reiterate the points from last video, I dropped 3 tips in that video which are still useful to this date. So number 1, make sure you're using forecasting whilst you're backtesting. I'll be showing you live examples of how I personally do this. Next one is to always focus on the higher time frame structure. You know, I talk to a lot of people, you know, in regards to backtesting. They send me screenshots of how they're backtesting, and the chart looks like this. You know, if you're down in the 1 hour chart or the lower time frames and you're very zoomed in, what you need to do is just take a step back, always go back to the higher time frame structure, which is great because we have a new trading view feature that allows us to do that without actually getting rid of price action. So I'll show you that in a minute. So always remember to zoom out. Do not get caught up in the lower time frames, because what you're going to find is that you just get involved in subpar valid trades, and it's not going to give you the best foundation when it comes to live trading as well. You want to treat your backtesting exactly as you would within the live markets. That's the biggest thing I would say. And another tip as well, which I dropped in the last video, is to focus primarily on the most recent 2 years of data. Now, this is just a guideline that I've used. You do not have to follow this. I'd say focus more on the first 2 tips. But yeah, the most recent 2 years of data is obviously the most cleanest from what it's been before in the past. If you just take this price action here, and then we go back to around here, like, it's a little bit cleaner, not too much of a difference, but we do have these clear structures now, which do make a lot more sense in these live markets. So that's just something to bear in mind. Now, let's get into backtesting. So first and foremost, what we're going to do, we're going to pick a time frame that we want to backtest. So for this example, we've just come into 2020 at the launch of this video, so let's go to 2019. Now what we're going to do is use the replay tool on TradingView that's available, and we're just going to mark this back in just before the start of the new year. So we're going to go New Year's Eve 2018, right? So we're just going to focus on that right now, and what we're going to do is draw in structure first and foremost, just to give us that foundation so that when we drop to the lower time frames, it's already set in stone and we're not second guessing what we're looking for, which is the key. So looking at this bigger structure, what am I looking for? Well, simply just looking at this, we can see that that is a clear impulsive move to the downside. This just acting as a bigger corrective phase to ultimately drop to the downside longer term. So let's just utilize pattern separation in this area here and see what we can draw in. So I'm just going to draw in the structure here, like so. This bigger expanding formation. We can see this coming into fruition now. So, bigger expanding formation, like so. So the question I want to ask myself straight away is, when I drop down to lower time frames, what am I going to be looking for? Well, right now, price is in the middle of no man's land, so I'm not looking for any buying or selling opportunities unless we get a clear structure that develops short term for a nice short term play, whether that's to the upside or whether it's to the downside. So that's something that I'm going to be bearing in mind. You can just draw in this double top as well. Cool. So right now, everything's set for us to drop to the lower time frames. Let's do that now. First and foremost, drop into the 4 hour chart. Any structure that's developing right now, not so much, just going to let this form. 1 hour chart, let's take a look at this. So 1 hour chart, we've broken out of this corrective structure here to the upside, and now it just looks like we're forming continuation or the start of a deeper correction. So at this stage, I'm not looking at too much, but what I'm going to do is fast forward this. I will play this out how I normally would within backtesting, and then when I spot a buying or selling opportunity, I will then join you back and we'll carry this video forward. Cool, so you're now joining me back into the backtesting session. So the reason I wasn't looking at anything before is because we're kind of in the middle of nowhere. As you can see, there's no real structure, and like I outlined before, the most important thing is always back out to high time frames. You know, if you ever get confused with backtesting, this is the great thing with TradingView as well. Let's say, for example, we get caught up in the lower time frame structure, we're not too sure what we're looking for. All you simply do, using this replay mode, it's already connected in place. Let's say we want to back out to the daily time frame, right? What date are we on there? 24th of Jan 2019. When we back out to the daily time frame, that keeps that in place for us. So this is a little new TradingView update. This is very beneficial. I think people were requesting this for a while, and you can see the date hasn't changed, so it doesn't allow you to see future price action, which is obviously one of the biggest keys within backtesting. So nothing's changed structurally. But yeah, going down to lower time frames, we do have a bit more structure right now. So just looking to see if we start to push up to this outer structure here, or this area here for selling opportunities. But the first area that I'll be looking at this sell will be here. So this brings me on to the first tip, which I talked about before, is forecasting when you're backtesting. Now you've seen me do it in live markets before, when I'm simply get the brush tool, point on exactly what I'm looking for in the markets, then take that to the downside or the upside, whatever the situation is. Now this is super useful to use it within backtesting as well, because it comes down to the concept of you want to treat your backtesting sessions exactly how you do in the live market. So however you trade in live markets, replicate that within backtesting, because the last thing you want to do is start taking trades within backtesting that are not in alignment with your plan. You have no idea why you're taking it. You're taking it because it feels good, but it's not in alignment with your plan, and you wouldn't take that in the live markets. So you have to always approach things when you're backtesting in a state of, well, would I do this in the live markets? Would I trade this with 10x what I'm trading right now? Like those same questions you need to ask yourself. So let's get into this. So what I'm looking for here, simply, is looking to see if we get any selling opportunities actually here. So ideally what we get is just a little push up to these areas of value, right? And if we do get that, we can see that we have this clear structure, like so. Anything like that, I'm just using this as a basic forecast just to give me an idea of what I'm looking for. So any selling opportunities around this area within that ascending channel, I'll be looking to take that to the downside from here. Let's say 40 pip stop wouldn't be unusual on pound Aussie. Remember, it's relevant to the structure, it's relevant to the pair. What you'll notice as well for you beginners watching this video as well is that a 40 pip stop on pound Aussie will be completely different to a 40 pip stop on something like euro dollar. It's relevant to the currency pair, so you need to bear that in mind. So if we just take a look at this, what can we have? Well, down to this low here, we've got 7%, and if we were to carry that all the way through, then we've got 19. But let's not get ahead of ourselves. Let's just focus on this. 7.8% profit, that'll be decent. So looking for a selling opportunity there, or if I don't manage to get that for whatever reason, looking for the first impulse, then I'll be looking to take the first correction within the move. So let's just apply that knowledge. So right now, as we can see, we're getting very close to the outer structure right now. And essentially, we can see that we have these three sections. We have 1, 2, 3 peaks here, line up that completion of that pattern, and we do have the impulse, this correction within the pattern, which ultimately means to me that it's completion of the pattern. So we may not actually get all the way there, but it would be nice if we get all the way there for the entry. But if we don't get that, I'm happy staying out of this trade, just because I wouldn't get involved in that trade in live markets. Cool, so we can see this formation playing out. Okay, cool. So we have broken a little bit earlier than expected, but we did outline that before. Now, bearing in mind that we didn't need to get all the way there, it would have been nice. That would have been the prime opportunity for me to get involved in that trade, hence why I'm not already in this trade. But happy with that. Let's just evolve this structure slightly because we have broken out right now. So I'm just going to use the most recent 2 touches and just evolve this ever so slightly. So the structure hasn't changed at all, just evolve this slightly to represent this as the top of the structure now. So simply looking for a couple of things. Well, let's not play this out. Ideally that wouldn't have happened, but it is what it is. Yeah, ideally here I would have been looking for more of a type flag. Can you see how this is more steep in nature? So this is quite steep in nature. I don't like these flags, these are not within my plan. I prefer the more, let's grab this price action here. I prefer these flags. Arguably that's quite steep as well, but it's more so the flat corrections in which we get the impulsive move down, then we get flat, and it's quite flat in nature here, flat and tight in nature. I prefer those. This is quite steep, and this is more so quite steep as well. So I don't really like those, just because, why don't I like taking this? Well, if you take that trade, you have to be aware of this low here, in which you can reject and actually come back up and form a deeper structure, and then move to the downside. So that's why I don't like taking them. But right now, looking at this structure, what am I looking for? Well, just looking for a larger flag to develop at this point. So looking to see if, let's just mark in the high, and let's just mark in this low. At this point, just looking to see if we start to form just a deeper flag, ideally a 3-touch structure. So anything like that, and I'll be all over that. I'll be looking to take that to the downside 100%. Why? Because that's within my plan, and I'll happily take that. So yeah, if we get anything like that along the lines 1, 2, 3, happy to take that to the downside. Whether I use the 1 hour chart, the 15 remains to be seen. But if we get that, happily take that to the downside. If not, if this does move back up to the upside, then I'll be looking for a clear ascending channel and a risk entry to take that to the downside. So just bearing in mind what entries are within my plan, and then sticking to that throughout backtesting. So let's see how this plays out. But we do, just judging by this structure here, if we just take a look at this, we do have the essence of a head and shoulders formation, so I would not be surprised if this does come down to the downside pretty soon. So we'll see how this plays out. Okay, so this is super interesting. So you know how I outline that 3-touch structure? So it's actually forming quite nicely actually. And what I like about this as well is the overall scoop here. This scoop arcs around, looks really nice for more downside. So what I'll be looking for right now is I'm actually looking to drop to the 15-minute chart just to use that as a little filter. But if I've got 2 entries in mind, and this happens in the live markets quite a lot, where I'll be looking for a 1 hour rejection to get involved, but bearing in mind on pound Aussie that, let's say for example, we get a retrace candle here, right, let's say, and then I get involved in there. It's quite a large stop, you can see 67 pips. Do I want to get involved in that? Not too much. I rarely go above 50 pip stop. That's just how I like to do things, but that's why I'll be using the 15-minute chart in this situation. But let's drop to the 15, see what we got. Drop into the 15-minute chart, what have we got? So simply just looking for, ideally, we can see this phase line here. Just looking for a bit more development. So we just rein this back in. Ideally what we get is we just correct a little bit higher, and then we start dropping to the downside. So I'll be looking shortly to set my order below here. Just a little bit more development. Yeah, this is looking good. This looks prime now to drop to the downside. So I'm just going to act as if this is live markets. I'm going to set my entry order just below this structure here. So if I get tagged, if price drops below here, I get triggered into the trade, and that'll play out nicely. So let's say, yeah, that's the downside. But in this situation, it would be like 55 just because it's pound Aussie. So let's go with that for now, and we'll see. What you'll find as well is that if I set the entry order here and price trickles up for a few more hours after that, then what I can do is just adjust this slightly, meaning that I can get in with a slightly tighter one. But yeah, it's not an exact science. Let's see how this plays out over the next few hours. So yeah, literally going to set an entry order here right now as if it was in live markets, and yeah, or I'm going to imagine myself setting an entry order is a better word for it. Yeah, you see how what I mean before. So if price trickles up a little bit more, I can adjust that just ever so slightly. Probably 52 wouldn't be too bad at this point. There we go. Looks prime right now. The fact that we price broke this previous high here as well is prime. So I like that. I like that very much. So 48 wouldn't be unusual here. Cool. So evolve it once again. You can see how I'm just doing this, right? You can actually do this, and I use this all the time in the live markets as well. So just gonna go with 45. I think it's getting very close to breaking to the downside, so happy with 45. Targeting the low here for 1.4, meaning that if price gets here impulsively and breaks, I'll be able to take the risk off the table should this develop into a deeper structure, and then looking for more downside. But let's just focus on this structure right now as it is. There we go. Cool. So the main thing that I'm going to do once I get triggered into the trade is I'm going to take a screenshot. Now this is as you'll see on the backtesting spreadsheet, we have the before screenshot and the after screenshot. So as pretty much as it sounds. So before you take a trade, so as you get entered into the trade, we put a screenshot here for trading view, and then after you manage to trade effectively and get out of that position, then you take another screenshot. So just you can go back to that, compare your analysis, and see if you can optimize that further and get better. So let's just take a screenshot, but I'm going to go to the 1 hour chart just to take the screenshot because it's more so the time frame that I use. So yeah, let's take a screenshot on this one. Yeah, this is looking really nice actually. So what we're going to do is, what you'll do is on TradingView we have this little camera icon. All you need to do is click that, take a snapshot, and then it'll provide you with this link. All you simply do is press copy, go to the backtesting spreadsheet, and then we simply right click and then paste that in there, and then you'll see this little link. So if we were to then click that, we can see it gives us a screenshot in real time. So it's good, it's really good to going back to. So let's just play this out. We're going to manage this exactly how I would in the live markets right now. So at this point it hasn't really moved too much. It's only been 1 hour. Start to move to the downside. Right now, it's in a point right now where this could actually move to the upside, or we just impulsively break. So it's going to be very interesting. Looks like we're dropping. Cool. So now at this point we've moved enough away, so we're around about 2.6. I'd be moving my stop to break even. So simply what I'm going to be doing right now is just grabbing a ray line tool. So you can see this little toolbox here. If you don't have that, simply go into the second option here under trend line and then go to horizontal ray. Now I have templates set up, so you'll see you can set up templates. So let's say I double click that, go to template here, and you can actually create new templates here. So you can actually customize something to your liking, then save that as a template. So I've got a trailing stop here that I use within backtesting just to mark on where my stop loss is, just so that I can't kid myself. I know exactly what I'm looking for and where my stop loss is. So break even for now. Let's see how this plays out. At this point we have broken this low, which is nice. At this point I'm just going to lock in 1.2. The reason for that is because we've broken out the structure impulsively now. I'm just going to lock in profit in a way that I'm just looking at profit just before price broke out. So using the structure, at this point in time we've moved enough away as well once again, so I'm just going to move this down. We'll try and move this down, that's the key question. There we go. So we've got 2.2 locked in, 2.12. Arguably another sell here, so you could actually get involved in that trade there. Is that within my plan to take so far into the move? No, I'm happy staying out of that, but arguably you can see that correction there following that impulse. Impulsive move to the downside, cool. It's going to lock in profit above. It's going to lock it in here. It's going to lock it in above, just above the structure here. So we've got at this point 3.5 locked in, and price is still dropping to the downside. So what targets am I outlining in order to aggressively manage this trade? Well, as soon as price gets to these areas of value here, once we get to these lows, then that's where I'll be more aggressive with the structure. So I'll be, trilling my stop a little bit tighter, just based on that can be an area where we get much deeper corrections or actually come back up to the upside. And if we just go back to the daily chart, just to give you an insight, also within the bigger time frame structure, this is essentially just a short-term play, because this can actually pop back up to the upside later in the year. What are we on, 2019? This can actually pop back up, which I remember it did, so you just have to bear that in mind as well. because it hasn't completed the overall structure. So if we take a look at this, so stop loss still above that high. And all I'm doing here, you'll notice all I'm basically doing is using structure with my management and then using the swing high as well. So that's all I'm doing. So right now this is just forming another correction. It's going to be super interesting to see how this plays out. You'd think I would actually remember this move, but I don't. But yeah, this will be an interesting one. All I'm simply looking for now is to see whether this actually corrects up to here, and then we get a rejection from there and drop. So that'll be interesting. And then at that point, I can then lock in more profit. But at this point, I'm just going to move profit down. So as before, I was locking in profit just above that swing high. Now, if I had taken that correction as a sell, this correction here, I would have moved my stop to break even by now. Hence why I'm just moving this down to the break even area of that correction. That's why, just in case you wondered. So now, right now, we've got 5% locked in. Cool. And don't get this confused too. This trade happens to be a winner, but the amount of losses I've taken in backtesting, the amount of break evens you take, this just happens to be a winner. So ultimately, it is the probability model just playing out. So you just have to bear that in mind. Yeah, so we can see the reason why I'm not forecasting at this stage as well, right, by the way, is that we're quite far into the move, so I'm personally not looking for any more trades at this point. So arguably this is actually approaching a valid trade in which if this actually corrected up to the downside, you can actually take that for a sell if we get a rejection or ascending channel. But for me personally, we're quite far into the move. I'm happy just managing this one trade. So that's why, if you're wondering. Yeah, so right now you can actually see that little ascending channel at the double top. This will likely just drop out from here, but I'm happy staying out the sell. Is that within my plan? It is, but it's quite far into the move, like I said before, so I'm happy staying out that. If this was at the top of the structure in these areas, I'd be taking that for sure. But right now I'm happy staying out that one. Drop to the downside, cool. Just gonna leave my stop in the same place because this can actually develop into a bigger structure. So let's see how this plays out. Yeah, just going to leave everything where it is right now. As we get closer, you'll notice me just subconsciously start to get a little bit more aggressive. So, but right now we're just in that corrective phase, happy to leave my stop here, just be a little bit lenient with that because that can come back up and essentially tag you out and then drop. So I'm just being a little bit lenient with that, 5% happily locked in. At this point, if I was in the live markets, I'd just be looking for essentially this. Just a little bit more development here, corrective nature, to then drop. But once again, I've seen this so many times where if you lock in profit, not to go off on a tangent here, but so many times I've locked in profit just above that high, price tags you out because, you know, price just moves above, false breakout, tags you out and then drops. So that's why I'm being a little bit lenient with the price, and that's what's within my plan as well. You can see 3-touch structure. Expect that to drop out very shortly. It's actually forming continuation, so this actually could push higher. Yeah. There we go. You see that? So exactly how I said before. It's that false breakout type action where if you'd have trailed your stop down there, I would have been out and potentially missed out on this profit here. So hence why I'm just doing that. Drop into the downside now, evolving into a much deeper pattern. Here's where I'm going to become a lot more aggressive, especially if price breaks this low here. This is an interesting one. Yeah, so right now there's two things in mind here. We can either create a reversal type structure in which this actually just creates a descending formation, maybe a double bottom something, and then pops to the upside, or this actually creates a smaller correction, in which case I'll still lock in profit, and then that can drop out. So two things in mind, but because we haven't had the completion of this pattern essentially, in which we've only had the 1 and the 2, expecting this to come back up to the third touch, this wouldn't be unusual for this corrective nature, because if I just look at this from a neutral standpoint, despite being in the sell, this can quickly become a bigger middle section of the pattern, in which this actually pushes back up. So although I'm on the sell, it's very easy to get biased when you're in the sell. Just take a step back. Let's actually drop to the daily chart again, just to see how price is looking. Yeah, this could do either thing. This could have a drop or push to the upside, so it doesn't really matter at this point. It will just react accordingly. Now it gets interesting, so lock in profit above here. You'll see me naturally becoming a lot more aggressive here. And if you look at this, it's quite starting to form this descending formation as well. So yeah, I'm happy to lock in a bit more profit at this point. Why? Just because it's creating that descending formation, it's almost giving us this little arc in nature to push up. So this will be interesting. So I'm just going to lock in profit in a way that if this was to develop into a smaller flag based on this nature, and this drops from here, I'd still going to be in the trade. But also taking a message from the market, if this does move to the upside, then I'm out of the trade for a nice profit. So I'm happy with that. Let's bring this down. Cool. So like I said before, this was either going to pop to the upside or create a correction. It was actually looking more so like a correction, but I was aware that this was actually it came from an impulse. So we had this corrective behavior here, it come from the impulse, and then this is essentially a pattern of its own, in which that starts to create that descent. So hence why I just was a little bit more aggressive with that. So you can see, so that turned out quite nicely. It didn't have to. That could have been 1%, that could have been 3%, but it actually turned out quite nicely at 10.18. So that was quite nice. So simply all I do once I'm out of the trade is I'm just going to clear things up just a little bit. Keep this ray line in here, and I'm just going to take another screenshot for the spreadsheet. I'm going to copy this once again, same process, copy that into the after screenshot, and then all we're going to do, if we just check on this right now, we can see that it's a very clean screenshot. So we can see that 1, 2, 3, clean screenshot. We know exactly what we're looking for, and then we're just going to fill in a little bit of data here, just so that we know why we got in the trade in the first place. So pound Aussie, direction, short, entry date, what was that? The 29th of January? 29th of January 2019. And then the exit date was the 6th of Feb. So 6th of February 2019. Stop loss, what was that? That was 449, so 45. 44.9. Grade. In my plan, that's a high probability setup, just based on the higher time frames, just based on this pattern. So that would be a high prob setup for me. Is that based around my plan? Yes, it is. Status, what was that? A win, loss, break even, win. And then it was, what was that? 10.25? Yeah, 10.25. 10.25% profit. So as you can see, that's just been added to that. That needs adjusting, but you can see if we just redo this, 10.25. There we go. So just need correcting, and same with this. But yeah, you can see one trade, total wins, and then profit or loss 10.25. So that's the trade. So that I just repeat the same process over and over again. And one thing I want to point out as well, this is probably the most important point of this video, and this is where I've slipped up before in the past. When you're backtesting, how long have we gone through? We've been through like a month of data, right? And we've taken one trade, but it wouldn't be unusual for you to take 3, 4, 5, 6 trades within a 3-month period. What you've got to be careful of doing is not transferring that same mindset into the live markets, because you can backtest a 3-month period within pretty much 2 hours. but you have to bear in mind is that the time differences are obviously different than live markets. So don't take that same psychology into the markets that, cool, well, over the course of 2 days I'm going to take 8 trades, because it's probably not the case. You need to approach it in the fact that you've just gone through 3 months of data within backtesting. So hopefully that's explained it a little bit well, but just something to bear in mind. That's probably the most important thing, because the amount of times I'd spend so long backtesting and have that same mindset just transfer over to the live markets is uncanny. So you just have to be aware of that, and always treat backtesting as if you're in the live markets. So hopefully that helps. But yeah, you can see that's just one trade. We could arguably go through this all day, but you just need to see one example to see how I backtest. And this is my process. Feel free to do different things. And this is, as I said at the start of the video, this is a more generalized approach to backtesting. So backtesting the strategy, go-to setups and things like that. What we're going to get into in the next episode, which is going to be really exciting, is going to be how to backtest pair behavior and how to backtest pair characteristics. Because just off the top of my head, pound Aussie behavior and pound Aussie characteristics of this pair is going to be completely different to something like Aussie yen or Euro Aussie. Like, they're completely different pairs and they all have different nature and they react different to different situations. So hopefully that is going to help.
So really hope you've enjoyed this episode regarding backtesting. Hopefully you've taken away notes of value and just insight into how I do it. So really looking forward to the next episode, which is going to be more so pair behavior, characteristics, and go-to setups. So that's gonna be sick. But yeah, hope you enjoyed this video. Have a great week, and speak to you all soon.
With